As we saw there, China's economy now swings a very heavy stick indeed, not just in terms of the production of goods, but also when it comes to consumption. Here to look at the current situation is the director of the Hamburg Institute of International Economics, Henning Vöpel. Henning, welcome to Made in Germany. Thanks for being our guest.
Thank you.
Is this just a correction, or has the bubble in China really burst?
Well, it's hard to say actually right now. Hopefully it's just a correction of market expectations. But maybe it's a bubble that is bursting because the government in the past has fueled kind of a bubble, but it remains to be seen whether a bubble is really bursting.
You say the government has fueled a bubble, but now Beijing is doing everything it can to prevent panic. Are those measures working?
I don't think so. Once a crisis is triggered or expectations are worsening, then it's very difficult for the government to intervene to stabilize markets. We have seen this many times before in such a crisis, and it remains also in this case to be seen whether the government can succeed in stabilizing the Chinese economy.
What options does it have?
Well, we can just provide more cheap money, buying bonds and other shares to stabilize the stock exchange. But this cannot really solve the problem that is behind the crisis, because there is a slowdown in the real economy, in the real Chinese economy. And so market expectations have to adjust to what we can say a new growth path in China.
Okay, you say market expectations have to adjust, but for the last 20 years or so, China has gone, at least from an outside perspective, from strength to strength. Is this optimism that's been generated going to dissipate with the current crisis?
I think so, yes. We have seen this in many other countries, that after a long period of fundamental and huge growth, economies are moving into a phase of lower growth, and this is exactly what will happen in China. So we have to adjust our expectations of, let's say, double-digit growth to, let's say, 5 or 6% in future years.
The World Bank said in its spring report that the Chinese state had gone beyond its role as a regulator and engaged in active interference. How much of this bubble was just created by the government?
It was mainly created by the government due to cheap money, monetary easing, and an undervalued currency. The renminbi is undervalued towards the euro, the US dollar. And that has led, or contributed at least, to a bubble that could now be bursting. But now I think Beijing is being aware that the Chinese economy is facing limitations of growth and will be on a transition to more sustainable growth.
Now, China is a communist country, but yet we're hearing things like private investors borrowing money to invest in the stock market and make even more money. That doesn't sound very communist to me.
Yeah, it is. It's a mixture, a very strange and special mixture of capitalism and communism, and China has taken this model to promote and to foster growth in China, and we will see whether it pays off in the future.
What would it mean for the rest of the world if the bottom falls out of the market in China?
Well, we see that the global economy is there's a special moment of the global economy. There are many downward risks to the global economy, and so China is crucial for growth of the global economy. And if China will be bursting, or the bubble will be bursting in China, this could hit the global economy quite hugely.
Okay, Henning Vöpel, thank you very much for being our guest today on Made in Germany.
Thank you.